Teare, old friend of ours, and in for a number of years, also the partner for these events and a number of interviews and insights you already covered in the past. So welcome and good to see you again in flesh and bone. Welcome, welcome, Gené.
Thank you, Marco. It's great to be here in San Francisco. So you can hear me? Yeah, so so should I go? Yes.
Yeah, so a couple of words. So we're going to go in a topic of what's shaking in Silicon Valley. As usual, you'll give us a bunch of data points that will be very, very compelling. I think the interesting part there is that there is a certain association for what is being presented exactly a year ago from you last year. September 2020, we were right in the middle of our pandemic, and so the world was about to fall. It's not that we're fully in shape now, but you were presenting a number of potential options about the tech world that had developed, in particular from a Silicon Valley standpoint. And it's interesting to see what actually happened and the data that you presented from last year to this year. So we thought it could be easier, considering how dense and important the data you can share, to run real quick on a few data points, a few slides, and then we can have a few minutes of conversation.
Perfect. Yeah. So thank you, Marco, and thank you, Mind the Bridge, for hosting us. So my name's Gené Teare. I'm from Crunchbase News. And we did predict, I think, in September that venture was going to be hot. It was going to sort of go up massively. I think we didn't quite understand how crazy 2021 was going to be. And I think I'm still defining the global VC as going through the pandemic. We're not really out of the pandemic. And I think the pandemic has been this defining moment for venture. So I think it's still applicable to talk about the pandemic as influencing what's happening. If you can go to the next slide. Just briefly on myself, again, I'm a senior data journalist. I work with Crunchbase News. I spend all day looking at the data and trying to understand trends through the data. Here are a few features that we write about at Crunchbase News. So we do a monthly funding recap because it's been so crazy on a monthly basis. It's good to understand what happened in the past month. Here are a couple of insights on different sectors. Like, we write a lot about venture trends. So the electric vehicle sector, the cryptocorns, which are sort of taking off, and also European fintech unicorns have taken off. So everything this year seems to be up on previous years across the board. The next slide. So as I say, the themes in tech in 2021 is really underlined by tech stocks taking off and then venture taking off, and we'll soon look at what that looks like. The other new trend, it's been happening slowly, but has really taken off in 2021, is the rise of PE in investing in private startups. I think we haven't seen the end of that yet. And then also, obviously, the question, how global is this? What is Silicon Valley's role in the whole tech ecosystem?
Or PE, that stands for private equity, obviously.
Exactly. PE is private equity. Next slide. What we have here is the Bessemer Venture Partners Emerging Cloud Index. And what you'll see, and I think what's very interesting, is you can see the cloud stocks as well as the leading leading stocks in the US market going up. You see a dip around when the pandemic has sort of started, and we're all aware that this is going to possibly massively impact our economies, and then it takes off from there very, very quickly. You can see it grows. And we've seen companies like Google, I think a year ago, hit $1 trillion. It is now almost $2 trillion. A company like PayPal, I talked to Roelof Botha, who was the CFO back in 2000. It went public in 2002. It went public at around $1 billion. He thought the most upside you could get in PayPal was around $5 billion. Today, it's worth around $300 billion. You can go to the next slide. And the next slide really shows you how venture has progressed over the year. And I think what's interesting is 2020 pretty much held up. It was a stronger year than 2019. I think 2018 and 2020 were on par. But you can see from December onwards, venture completely took up, where it's almost doubled on 2020 and almost any previous year's numbers. You can go to the next slide. And I think that's a bit of a lag. You'll see when you looked at the tech stocks, they went up more quickly. For us, really, in venture, it sort of took off around the end of 2020. Here we're looking at new unicorn creation. This is something we follow very closely at Crunchbase. And I think what's really interesting is early in 2020, you're almost seeing one new unicorn every 2 working days. As you get to the end of 2020, it's almost one unicorn every working day. And then fast forward into 2021, and we're getting 2 or 3 new unicorns per working day. And the craziness we feel at Crunchbase News and at TechCrunch and other outlets is how to cover all of these fundings that are happening across the ecosystem when you have 2 or 3 unicorns almost every working day.
And Gené, this is global data, right? This is not just for Silicon Valley.
Correct. This is global data. This is across the world. If you go to the next slide. This is where the Crunchbase Unicorn Board is today. So we're almost at 1,000 companies. The valuation of these companies collectively is now at around 3.4 trillion. And collectively, over the life of these companies, they've raised 650 billion. So on our unicorn leaderboard, these are just the current private unicorns. So this does not include all the companies who've left the unicorn board and have become exited unicorns. If you go to the next slide, what you'll see here, and I think this is really interesting, is if you dial back a year ago, we've added almost 300 companies to the unicorn board. And again, that doesn't include companies that have exited since then. We've added more than $1 trillion in value. So it was valued, the board a year ago was valued around $2 trillion. We've added almost more than $1 trillion in a year. And these companies have raised almost 200 billion more than we were reporting a year ago. So a substantial increase. If you want to go to the next slide. Here we're really looking at who is doing the majority of investing in private companies or investing the most dollars. And I think what's really interesting about the slide is private equity has been playing a bigger role over the last decade, over the last 5 years even more so, but 2020 it completely took off. And what you'll see at the top is people like Tiger Global Management, the SoftBank Vision Fund, who used to lead Code2, Insight Partners. They're at the top, not only by the amount of dollars that they're investing, and this is rounds they led or co-led. We don't always know the investments they made. So these are based on the rounds, but what you'll see is the amounts they're investing, but also the sheer number of companies. I think Tiger Global has led 84 rounds in the first half of 2021. It's an unprecedented figure even for these firms. And I also think what's interesting about this is, the very first venture firm or the venture firm who is leading by the amount of dollars is Sequoia Capital. They're 12th on the list. They're the only venture firm to make this list, and they've led 34 rounds.
And they look so small compared to the rest, right? So the mighty Sequoia looks dwarfed by the numbers.
Exactly. And it's interesting because Sequoia has raised huge amounts of capital across multiple funds, and still, they're not leading on this list. It's all the private equity folks. If you go to the next slide, I think what's interesting here is we're looking at rounds led and then rounds participated in. And you'll see the whole venture ecosystem obviously plays a much bigger role. Private equity does not lead in terms of the number of rounds led. But what's interesting here is the 2 Tiger Global Insight Partners are leading the most amount of rounds in 2021 so far. So this isn't just H1, this is going on into 2021. And again, even the SoftBank Vision Fund, I think, is ahead of most of the venture firms in terms of the number of rounds they've led as well. So yes, venture does dominate in our ecosystem, but private equity is pulling no punches and investing in many, many leading companies. If you go to the next slide. So I think, outside of the Bessemer Index and looking at the tech stocks taking off, I think what's interesting about this slide is we did anticipate a very hot IPO market. You can see it's far surpassed anything we've seen in previous years. So this is new listings. It's looking at the count of new listings above $1 billion, as well as the value at IPO or on that first day pop based on the data that we can gather. And already for 2021, this has surpassed $1 trillion. You see 154 companies that went public over $1 billion. Again, this is globally. And about a third of those companies were via SPACs that went out.
We're still missing 3 months, by the way, that typically are a pretty busy time of the year for more IPOs.
Exactly. And I think we anticipate, based on what we're seeing, the rest of 2021 is going to be a hot IPO market. August was actually a little slower, and I think into 2022 as well, we're anticipating a very hot IPO market for new listings. You can go to the next slide. So the question is, what is Silicon Valley's role and how much does Silicon Valley dominate? And what I wanted to show is over from 2011, I think what's interesting about this slide is two things. One is that Silicon Valley's dominance lessens, not drastically, it goes from 27% down to below 20% over this time frame. So I think that's interesting. But I think what's even more interesting is how big the pie has grown and how much of that pie is now outside of Silicon Valley. If you want to think of the US market is around 51% of funding in 2021. It has been higher in some years. It's sort of not really above 60%. We see 47, 48. So I think the US market is coming down as Silicon Valley is coming down, but it is still dominant and plays an incredibly important role. But again, how big that pie is interesting. And then also, I think this year, we're projecting it's going to be just below 600 billion. I don't think it's quite going to go over 600 billion. We'll see if things change. But that's what we're projecting.
Those are crazy numbers, right?
Crazy number, yeah. So almost double what we've seen in previous years. You can go to the next one. And then finally, just looking at, over the last 2 years, the dots show the individual months, and then it's sort of crested out for a 3-month moving average. And I think what's interesting here is you can see as we move into 2021, the US takes off. The role of the US, you can see, is incredibly strong. Asia is a little patchier, and then you see Europe beginning to take off this year as well, and hitting above, I think, 10 billion in funding on a monthly basis for some of the more recent months. So I think Europe's share is going to grow. Proportionally, it's grown this year, and I think we will see that continue.
So I think we're going to cover some of that part also in the report that we'll be launching today. But this is very interesting data. It's interesting to see also how Asia, in the middle between Europe and US, has been kind of going up and down. I want to comment of first thing I think is interesting, that in a few months, Asia really was matching US amount of investment, so which is a data probably got lost in the general narrative. And number two also is interesting. It would be interesting to know why is there so many ups and downs from the Asian market. Was because of a lot of big events. I assume.
So I think in the Asian market, what we saw is when it's sort of peaking and hitting on a month, the US numbers, there are very big rounds going into Asian companies, and in 2 markets, specifically China and India, have raised, some very big funding. So I think that's what that represents. Also, other Asian, Indonesia is coming up. So I think Asia is going to be a very interesting market. It's interesting. It's a little choppier than what we're seeing in some of the other markets where it's a little more stable. With Asia, in terms of our data, we're very strong on the later stage and earlier stage. Seed, I think we're less. We have less coverage on the seed stage compared to the European and US markets. But again, Asia isn't showing. It's up and then it goes down. We see very different trends year over year in the Asian market.
And sometimes it's hard to associate also investment to a specific country, also because those funds are so global, right? I'm thinking SoftBank. What do you consider SoftBank? Is that an Asia fund in your accounting, or is an American fund?
Yeah. Well, interesting. SoftBank is headquartered in Europe. I think for most of the funds and most of the late stage funds that I talk to, they're very active. Obviously, in the US market, they see that as a huge market. More and more, they're seeing Europe as an even bigger market. And we've seen a lot of the US VCs are all moving. I'm speaking to Lightspeed next week. They've just hired a new head who's going to head up Europe. Sequoia's in Europe. So all of the big VCs have now decided they need to have feet on the ground in Europe because of what's happening in Europe. Also, when you talk to some of the hedge fund folks, they've been investing in the Asian markets a lot more in public companies than private companies necessarily. But again, Asia is a huge market for these people, and a lot of them do have feet on the ground in the Asian market as well. So I think, tech companies are often global, and we're seeing the, VCs. When I started in the Valley in the late 90s, a lot of VCs said they wouldn't even move from down in the Bay up to San Francisco. It was too far for them to invest. And now they see the globe, as the place where they want to invest.
And if there is a news here, I think the highlight of all this movement of 2021, that is, relatively speaking, Europe is on fire. So everybody's really wanted to have a foothold in Europe from all different points of view, the venture side and the scale-up side as well.
Yeah. And I think, Europe has led in fintech. We're beginning to see some of those decacorns come through on the European side. But I think the interest, in the US, where do you go after you've gone to markets in the US? You're going to go to Europe. And so that's the trend that we're seeing is every single VC, and one goes, and then they all decide that they need to be there as well. And so everyone's setting shop in Europe.
You have more slides, right?
No, I think we're pretty much, well, I guess just to finish off, I think really what's driving this, besides the pandemic and the fact that we've all had to shift online, is we're really in the era of cloud and mobile. Those have opened up huge opportunities and huge markets in almost every single segment. I think what's also been interesting about 2021 is often when we see a lift or an increase in venture, a lot of it's happening at later stage. What we're seeing this year is every stage is up. So seed is up. Early stage is up quite substantially, and late stage is up the most, early the next, and seed the most. But almost every single funding stage has been much bigger than in previous years. And also, this climate is very different, where investors see huge opportunities, and this is in marked contrast to what we saw in 2008 when things slowed down quite substantially.
Okay.
Well,
that's awesome. I think as to start the conversation, that's plenty of data, plenty of insights. As I was saying before, right after this conversation, we'll show some of our data that is for a good amount is also based on your data. It's just that a slice and dice of the data is slightly different, but obviously we are experiencing the same macro trends. So maybe a couple of follow-up questions from what you presented. The first one about the PE world, the growth equity entering the world of venture. Is that something that you think we should get accustomed in seeing coming maybe even earlier in the game? Because those are relatively, as you were showing, relatively new movement. Is that something that you think that is, some of the growth equity PE folks will start coming earlier in a space that is typically the VC's stronghold?
Yeah. I think what's interesting, I think we are going to see PE play a much bigger role in venture, as we've already seen in 2021. And I think there are more players who are going to pile in as well. They're going to be watching the Tigers and SoftBank and decide this is an area they want to play. And for a lot of these PE outfits, if you look at value creation, they look at it in the private markets and the public markets. Really where they want to play is in the public markets, but they understand that to get into those high value tech companies, if they play early and get involved when these companies are still private, they have a better opportunity of owning those companies. So the PE folks are really driven by the public markets. I don't see them, when you talk to any of them, they don't really want to invest in risky early stage startups. They don't want to invest in the seed stage. They don't want to invest in the Series A stage. They will invest in those companies that are showing growth. So in a way, they're stage agnostic. They will say, if a company is growing significantly, we want to invest, whatever that series is. But typically, they do not want to play at the risky stages. They want to play with those growth companies. And so I don't see those, the PE investors moving into Series A. I don't see them moving into seed. I think they'll do it sporadically. I think really where they're focused is companies who are going to or about to hit an inflection point, and can they get into those companies? And obviously the big venture folks, the multi-stage venture folks like Sequoia, want to be very active there. So it is going to be a much more competitive market. And as a result, those valuations are going up, which we've seen. Seems like less diligence. Those deals are closing very, very quickly. So I think it is a very hot and competitive market, but the DNA of PE, I think, is just very different from venture.
Yeah. And it's also true that, in the next topic, the unicorns are offering some sort of a, stepstone that is at a clear level of valuation, where companies are becoming applicable for those players. So talking about this blooming of unicorns, we saw the numbers even from last year is really astonishing how quickly this has grown. Looking into the future, what could be factors to slow down this overcreation of unicorns?
Yeah.
Kind of thing?
I think, we are in a very particular moment in 2021 with the pandemic and, these stocks kind of taking off, in ways in which we've never seen before. People are concerned that the markets are overvalued. I think on the unicorn side, it's almost an overhang with the pandemic and the speeding up of digitization. We saw companies go through a massive inflection point that are able to raise at very, very high valuations. So I think this pace of 2 to 3 unicorns on a per working day in a month, I see that slowing down. I can't see that continuing because it just seems too frenzied. But I don't think we get to previous levels. At this new, I think the more companies are going to come through. There is so much more to, when you talk to any of the investors, obviously they're talking shop, but they see, bigger things coming in the next decade than we've seen in the last decade. And so I do think the unicorn creation is going to continue, but maybe not at the levels that we've seen this year so far.
Yeah, and I remember you presenting last year, this time of the year, we were showing how and potentially the number of unicorns was accelerated by a pretty unknown pandemic by then, and clearly this materialized in big numbers. So
Yeah.
you're really, reinforcing what you started saying last year. More on the geographical kind of race, if there is one, into venture. Very interesting, the different lines that you show. That we had some notes already on the impact of Asia and Europe, and see that gap with US somewhat getting smaller, but still significant, right? So US is still, in particular with Europe, we were looking at least double the figures. Do you see a future, and if yes, to what extent that gap can actually, be closed from these three continents?
Yeah. I think if you watch what the venture folks and the late stage folks, the growth equity folks are doing, the fact that they are prioritizing Europe and Asia and global as a space to invest, I think that tells you that we've seen Silicon Valley come down, we've seen the US come down somewhat, we've seen the pie grow. So I think those trends will continue, but I anticipate slowly. I think there is such a pull towards the US market. And even when you talk to European VCs, the pull towards getting European companies into the US market and leading in that market is still incredibly important. I think you found that already from the Israeli tech scene. So I think the pull of the US market is still incredibly strong. And I think for many founders, you don't need to just make it in the US, but coming to the US is still incredibly compelling. So I think even though we will see money go to other places and those places will grow and we will have more unicorns and decacorns. And, one of the things that SoftBank Vision Fund said to me recently is they've changed their strategy. They used to invest in a single market leader, and create a money moat and pile so much money into one market leader. Now what they recognize is that in many sectors there will be multiple market leaders around the globe. And so they're investing in more than one company in a sector to win. They're doing smaller checks, but in more companies. So I do think the other parts of the globe will continue to grow in significance, but the pull of the US is so strong that it'll be slow.
Got it. So I'm looking, there is actually a very interesting question among the questions we're getting. This is from James, and he's saying that at least 1/3 of IPOs this year are through SPACs. This is probably a larger discussion, but he wants to know your take of how it looks like in 2022.
Yeah. I don't think SPACs will overtake conventional IPOs. But I do think SPACs are incredible. The fact that they were a third of the listings that were above $1 billion, I think is incredibly significant. And I don't think SPACs go away. I think there are so many companies who are looking to go out. We've had, fewer direct listings, but some direct listings. We've had more of the conventional IPOs. I still think the conventional IPOs will dominate, but I think SPACs are going to continue to play a huge role. And it's just because there are so many companies wanting to go out, and a SPAC is just an easier route, and there are going to be companies that make it through. So it's, we watch the SPAC space. It seems very choppy. 1 month it's very hot. The next month it seems to have slowed down. So I think SPACs are very much part of the options for companies, given how many need to get out and would like to get out.
Interesting. Back to the geographical differences and rates of growth. I mean, you were showing obviously one measurement that is a fund raised, right? That doesn't necessarily mean that there is a lot of returns out of those funds. So if you were to plot something that is closer to real monetization that is happening in those markets, IPOs, M&As, you name it, do you think that those lines would be different from U.S. versus the other two continents? U.S. is known to be a very accessible market for exits, right?
Yeah.
IPOs and M&As.
Yeah. So I have to say the theme for me, I've been very interested in returns, and I speak to a lot of venture folks, and I'm very, as I said, I did an interview with Roelof, which was very much focused on the fact that they have had unbelievable returns in this 2021 year. I think for us, it's very difficult to understand what's happening on the return side. In speaking to folks in Europe, I think one of the things that one of the ways you can look at that is look at it from the percentage of funding going into markets and the proportion of GDP. And if you look at the US in 2020, it was around north of 160 billion went into startups, and that's about 0.75% of GDP. If you look at Europe, it was north of 40 billion went into startups in 2021, and that's about 0.22% of GDP. So much smaller proportion. So the sense I get in talking to European VCs is they're not seeing the pension funds, the private equity folks invest in venture-backed startups as much as you're seeing from the US, and that means the UK pension holders do not benefit. So I do think there is Europe has ways to grow into it, and the return, I think a lot of those returns are coming to the US private equity growth, pension funds, endowments, etc.
Right. Well, I think that's a perfect transition to what we are presenting next, because that measure that you just mentioned, the GDP, the investment over GDP, is one of the measures that we keep track of in our reports. So with that, thanks again. It's been lovely. Thanks again, Gené, to have you here. And I'll pass it over back to Alberto in Europe.
Thank you. Thank you.
Hi, Marco, and hi, Gené.